Okay, so welcome everyone to Financial Fox, our usual Thursday, which is Smart Investing with Clem Chambers and Zach Meir. Now, I'm waiting for Clem to join. I hope that he's gonna come in a minute. And the same for Clem. What I just wanted to say right now, so I'm not going to keep you waiting, is please ask a question, because this is your opportunity, to get answer, to see what expert thinks, to also make suggestion, open up yourself, your strategy, check out what other people think, and it's a great opportunity to kind of being able to speak with these guys, with people they are really investing in the stock market for living in a way. So it's quite a unique opportunity, also because we know that information is key. So being able to have all the data and being able to analyze and interpret those data is very important for you to make more sound and more conscious decision when you are making any investment. Because at the end of the day, is your money, is your decision, and you need to have a strategy. You need to understand the fundamental of the market as well. And currently the market is quite interesting, let's say, from a macro perspective, and that reflect obviously in smaller sectors or in smaller market that could perhaps be the small cap, where the upside can be higher, but can also be more risky. So what are you going to do? How are you going to face these kind of challenges, and how are you going to position yourself to take the most, to make the most out of the opportunity, but also to minimize the risk? Now, another things that I would like you to be a little bit more active is definitely to ask a question about cryptocurrency, because it's not a fad anymore. It's not like the weird, nervy things that people should just leave there because it's too risky. Perhaps one day it's going to go to zero. This is not happening. I mean, this is not happening also because we have seen institution taking position in crypto, and that's a big thing, right? That was all 2021 was about institution coming into the crypto space, and that's a big thing. But we are still at the very early time of crypto, and there are still big opportunity for everyone to make money. It's just a question to skill yourself up and understand what kind of opportunity you should look at, and that's why we have people like Clem on the show, who is joining just shortly.
Yay!
Hi, Clem. Hi. I went live and I did a bit of like my blurbs. So
don't you just love Microsoft software? Every time I use Zoom, Skype grabs my camera and says, "No, you can't have the camera for that Zoom stuff." So I have to reboot my whole machine. And of course, you never know until you go to use it when it goes error. Anyway, here I am. Sorry.
Fantastic, Clem. I was just saying how important it is for people to try to look at crypto at the same time as they are making their investment decision in the equity space, for example. So everything that we have been discussing. But, I don't want to, I mean, I would like to start with some interesting news. I know that you can say what you can say, but...
No, you're not going to go there. The ADVFN RNS is out there about what we're doing, and we've got to be, because we're in a offer period.
Yeah,
I can't say anything at all. Nothing. Zero. Zip. I can't. I have to have an advisor sat next to me, who then is my guard and protector.
Okay.
So I can't. So we can't go there.
No, definitely I understand that. But let's just say ADVFN.
No.
Okay, let's go talking about macro a bit, because the last time was all about don't believe the Fed. The Fed is lying, which is what we have been saying for a few months now.
Well, I haven't been saying that. I haven't been saying they're lying. I've been saying that they've got some objectives, and it's not for them to tell people what their objectives are in such great detail that they can be front run. Yeah, they have to say what the situation is right now and how they are imagining the future, and they're not going to say, but this is our plan and this is what we've got to do. I mean, you can't go around spinning the beans to the world about what your policy is. I mean, because they are effectively part of the market process, and these days they are the market process, so they can't give people the opportunity to front run them. So they're not lying. They're just putting their case in a certain way so that people have to try hard to work out what's going on.
But Clem, do you think they are adjusting their strategies as for example, new numbers about inflation, about unemployment are coming up, or they already know what they are going to be doing, and the whatever data are coming doesn't really matter to their strategy?
I remember when I was working with GE a long time ago, there was a guy who would run one of their divisions, and he had a meeting with Jack Welch, who was, pretty much one of the demigods of the world at the time. And I said, so what's it like having a meeting to tell Jack Welch?
Oh. Okay, I think we freeze. Let's see if we should have Clem back soon. Yeah, but it looks like freeze. So let's give it some time to reconnect. Yeah, just bear with us. Okay, so that's Zach is coming, so let's bring him on, and then Clem is going to reconnect. Just some issue. Zach, welcome. I think today is a bit complicated. Let's say that everybody has got some issues with the connection, and that's maybe the result of everybody coming online and working from home, and yeah, I mean, I guess the bandwidth is what it is, and if we overwhelm it, we're just gonna get this kind of situation. But yeah, so Zach is on, and that will be good to see what he has to add as well. And we are waiting for Clem to come back now. Yeah, well, interesting. So I would like to ask Clem again a bit about the Fed strategies, and then perhaps look at also ESG and all the concept of greenwashing, which is kind of like a big topic, because not only company, but also some of the PR company, they are promoting and let's say the ESG aspect of many company, or maybe over promoting when they shouldn't, and environmentalists are attacking PR companies. So that's something quite interesting, and I think is important to kind of clarify this concept of greenwashing. So that's something that I also would like to perhaps ask Zach, which it might be the one that is more into ESG and seeing also new company coming to the market into that space. Then I want to go back a bit to crypto. Because we got a bad last week, but it looks like we are coming out, and perhaps tokens and cryptocurrencies are gaining momentum again. Now, are we entering a crypto winter, or that was just an episode of buying the deep opportunity. So let's see as well what Clem has to say on that. Okay, I see that Zach connected. Zach, we are live. I'm just waiting for Clem to come back. So
I had a power cut. That'll teach me to talk about. That'll teach me to talk about Jack Welch.
Exactly.
Had a power cut. Shall I finish my story?
Yeah, please. Okay. We just stopped
So,
at the beginning anyway.
So this guy is going to present to Jack Welch about one of G's division. And I said, what's it like to talk about Jack Welch in a meeting like that? And he says, well, I hold in my mind all the time that he puts his underpants on one leg at a time like everybody else. And I thought that was profound. Not really profound, but you get the feeling, nobody puts their underpants on two legs at a time. And, it gives you a picture of that we're all mortal. And it doesn't matter whether you're head of the Fed, you're just another Homo sapien. And, might be the most powerful financial person in the world, but he's just like any other. If you stand on his toe, he goes, ouch. And when he needs to go to the loo, he needs to go to the loo. And so he's as fragile as we all are. And so he's going to be going through all the sort of thought processes that we are. He's obviously got another 25 IQ points, but they have to play it by ear as much as we would in that situation.
Exactly. Okay, that's interesting, because some people, they might think, right, the Fed already kind of is the one pulling the strings, but actually is not.
People never pull the strings. It doesn't matter how powerful you are. It doesn't matter how clever you are. It doesn't matter how experienced you are. Nobody. This conspiracy theory of these great powerful people that manipulate worlds. That's rubbish. That is rubbish. They're just as distracted when a pretty girl goes by. They're just as eager to eat as anybody else. They're just guys and girls like everybody else. And as fragile and as
even Boris Johnson.
Well, I mean, for example,
he is one of the elite. He can walk on water. He can do whatever he likes because we'll never get rid of him because he's posh and he's charming, and we just can't do without him.
Well, my point is exactly the opposite of what you just said, and I think that history shows how fragile and mortal we all are, and it doesn't matter whether you are the emperor of the world. You can fall pretty quick. And you can manipulate very few of your existing situations.
Yeah, the same will apply to Fauci of the situation of, anybody else on that kind of side.
But Zach, on the other hand, he does pull the strings.
Okay, Zach, tell us how you pull the strings.
I pull the strings by not believing in all the idiotic conceits that we've created in our society, largely through lawyers and other people like that. But I think you were mentioning ESG.
Yeah, I was.
How much of companies' budgets now go towards having to produce a ESG policy and all that sort of politically correct rubbish, when it should be something in a public company which is done ordinarily in the ordinary course of events, and it always was done in the ordinary course of events until 2 or 3 years ago. But now you have ESG officers and all that sort of money wasting stuff for shareholders, which is just ridiculous. And most of the company, I mean, obviously by definition, if you're a mining company or a nuclear energy creating company, or you are operating in developing countries, tearing up the landscape, the ESG aspect is never going to be good. I mean, it's just madness. It's the madness that you have with it's sort of madness that you have where you buy a packet of peanuts and it says may contain nuts. I mean, it's completely we are in such a woke madness. It's completely these things are just, I don't know how we've got to this stage, but I think it's sort of legal or legislative tyranny that we have. It's not even governments now. It's just literally the lawyers have got us tied up in knots. The cost is incredible. The utility of it is zero, and the time wasting is amazing. And I don't know why people stand for it. It's just unbelievable.
Well, I think one of the things that people should think about is the word environment. And which environment are you talking about? Are you talking about the human environment, are you talking about the natural environment? Because if you look at the natural environment, the really natural environment, that can support 250.
Sorry.
That can support 250,000 human beings, because that's how many human beings were supported by the natural environment before humans decided to turn the natural environment into the human environment by things like fire and farming and hunting and tools. So I don't think anybody wants the natural environment to be the environment they live in, because the natural environment won't support more than at most 500,000 human beings. But obviously the human environment can be pretty rough. I remember visiting the Maldives, where there were islands which only the natives could live in, and all the coral reef around them were dead and full of poo. And that was their normal environment before modern technology, because they had no way of looking after their sewage. They had no way of throwing away their waste, which was, primitive waste, but nonetheless enough to make the waters around a small island pretty interesting when you've got a couple hundred people living on it. So the environment, the human environment you want to live in is key. And the human environment can be pretty horrible and can be pretty wonderful. But how the human environment is looked after is very different from how the natural environment and gets looked after. The Alaskan wildernesses, the Yellowstone Park type idea. So there's this counterbalance between the people that want the natural environment that I don't think realise that they can't actually survive in it, and humanity can't survive in it, and those that want a decent environment where there's a good interface between the natural environment and the human environment where most people can prosper. And if you look at today, the human environment has never been better. There's never been more people able to survive, and there's never been more a time where people have been able to survive longer. So the human environment is pretty decent. So I think that's a dialogue that needs to be discussed and isn't being discussed, because people think the environment should be the natural environment, which can't support more than 300,000 human beings unless you start to make it and move it towards a human environment. So that's my thought on the matter.
So what do you suggest? What do you suggest? Everybody should go. 9 out of 10 people should go to Dignitas so that we don't ruin the environment anymore.
No, absolutely not. Absolutely not. But I think that people that are discussing the environment should realise it's the human environment we're talking about, not the natural environment, which was there 8,000 years ago before we climbed out of our furs and our stone axes.
Yeah, exactly. Yeah, I mean, this is a big topic, because now we are seeing that environmentalists, they're actually attacking PR company of the big, oil and gas or, big company that they are actually saying they are investing a lot in ESG when actually their business is the opposite. So I thought it was quite...
It's called the process of democracy, and it's good. And until people understand how to moderate their emotions when they engage in these processes, then there will be misery, because people will be in conflict. But conflict is the human way, isn't it? And until people can be cool and groovy about conflict and kind of like say, hey, we're all friends really, and rather than this modern age of rage where everybody wants to hate everybody, then people would inflict pain on themselves by taking this stuff too much at heart and too much on the surface, by looking at headlines rather than looking at what is really going on.
Exactly. Zach, do you have maybe any kind of like red flags for greenwashing? So if it is a company, you say, oh, okay, this is greenwashing. It's not.
No, sorry, Steffi, you're working on their agenda by using the words that they create. You should really look up things like situationalists.
Yeah.
You set an agenda by making up these words and getting everybody to use them, and then you own them through linguistics. So taking on all these greenwashing, for example, that you're just signing up for a war you don't have to fight.
Yeah. So just to answer the question, Steffi, I'm totally against, as I said, the whole ESG thing and everything else, because it's hypocritical. You can't do any business. It doesn't have any logical. It's a total barrier to doing a business of any kind. It's a total waste of money, and the only people who gain are the lawyers who help you draft your ESG policy. That's why we have ESG. It's just because of lawyers making money. It's a conceit the lawyers have created, and they keep creating all these sorts of conceits. They've done that with the stock market. They did that 30 years ago with all the compliance and all the other rubbish. All the HR as well. That's another money wasting and lawyer based conceit. None of them have helped anything. They haven't. The compliance didn't help safeguard against Leeson or the 2008 crash or anything. They don't prevent any of the things that they're supposed to do. The misery in the workplace is not helped by HR departments. There's literally nothing that these initiatives have done in my sort of conscious lifetime, the last 30, 35 years, which have helped at all. They just continue, but you have an added cost. They're just added costs on business, added red tape, added bureaucracy, and at the end of the day, they're massive hypocrisy as well. Just like all the environmentalists that you or I know, all of them go fly around taking holidays. All of them have mobile phones. All of them don't eat locally sourced food. All of them use central heating. It's all complete rubbish. Yeah. And I'm not against. I'm totally pro the environment. I'm pro all these, social justice and all the other stuff. But the way that all this is just basically, it's like pay to, with all the environmental thing. Most of the things we have, like congestion charge, all it is pay to pollute. It doesn't reduce pollution at all. All it does is just paying to pollute, paying to drive around. You've got the tax on petrol. Same with ESG and everything else. It's impossible to if you're a capitalistic company, to actually get anything to do any business properly.
Well, I've got to say, my experience in business is that over the last 10 or so years, the amount of pointless paperwork and box ticking has exploded, without a doubt.
Exactly, and that's what I call a legal tyranny that we have. It's the lawyers who keep coming up with more sources of business. They've been ruined over the last 10, 20 years because many of the normal sources, the old sources of business that they had, which were criminal activities, physical criminal activities, have gone, like robbing a bank and mugging people, because we've got cameras everywhere. And so they've gone into the sort of the white collar area, and they've gone mad there, and they've just created a complete nightmare for anyone trying to do anything, in business or in anywhere else, or you set up a shop or whatever you're trying to do. There's just a massive wall of red tape and cost and time wasting. And I think that if there's any revolution to be done, forget the anti-vaxxers and stuff like that, it is actually to a bonfire of the pointless laws that we have, a sort of Kafkaesque nightmare of pointless laws, and most of them contradictory, and all of them expensive and counterproductive.
Well, there is undoubtedly an ESG pushback going on, and it is kind of strange how these legal memes, investment memes, pop up out of nowhere, and it to me popped up from nowhere. But that this is the world that we live in. There's nothing wrong with social justice and environmental.
No, I'm totally in favor of all those things. I think that the current ways or the methods or the things that you're supposed to do to enable that don't actually serve the purpose. They're not fit for purpose, so they don't do anything. All they do is create a cost on a company.
Yeah, I mean, what I see is the following: is that you have this criminal element, which is a tiny element, 1 or 2%, and they're out there in everything that you ever see. There it is, and they ruin it for everybody else. So the people that fly tip in lanes building rubbish are that sort of element that causes a huge amount of paperwork for everybody else. The hackers that go round, the 500 hackers of the world, cause massive amounts of cost for everybody involved in trying to keep their stuff safe, and all sorts of laws like the cookie laws that came out, and now they're not so good after all, etc., etc. All these reactions to the tiny criminal element cost us fortunes and cost us huge amounts of effort and problems. And that's
the cure is worse than the disease. It's one of those things. The cure is worse than the disease, and it doesn't actually stop the disease either. So it's a double hit.
Yeah, quite often, because after all, the criminal element are the early adopters of everything, particularly technology. So the governance is always chasing this small group of ne'er-do-wells and causing trouble for us. And not that the ne'er-do-wells wouldn't cause more if they weren't actually chased, but that is the history of governance right there. These laws that come in. One guy kills 30 people somewhere in England, and all guns get banned, for example. But that's the way that people, start stabbing each other, so knives get banned, etc., etc., etc. But it's that interaction between the criminals and governance that causes trouble for everybody. And there you go. That's never going to change, is it?
No, exactly. I mean, it looks like after wave, we have another wave. And, a couple of years ago, we got cannabis. Then we have got ESG. Next is going to be the space. And, what
about markets? Yeah, I agree. What about markets? Forget the politics. That way leads madness, as we've seen with Zach.
Yeah.
Let's think about the markets.
Okay, Clem, ASOS. Okay, they are having an interesting morning. So do you want to comment on that? I remember that.
Well, I mean, it's very, very interesting. I've done very, very well with ASOS and with the other guys, Boohoo. And I don't know what they've done this morning, but I've been surprised at how they've been hit and hit and hit. And today, what happened? Did they get hit or did they get love?
Let me just share the screen. Here we are. So, ASOS.
Oh, they're up. They've got some love. Well, that makes perfect sense to me. So why did they get love? So 13 trading state. So yeah. So things aren't as bad. I mean, they're in a pretty nasty looking trend there. I don't really understand why, because I know that everybody's fancied that one day they're going to get bought by Amazon, which I think is very speculative.
Okay.
Because Amazon don't need to buy anybody. But if you look at the level of business they're doing, it's funny because I flip flop on this. Once upon a time, I used to own stock in Gus, General Universal Stores, which are catalogue, right? To me, ASOS seems to be catalogue business, but on the internet. Now, Gus was valued at a terribly low rate, terribly low rate, and they got taken private in the end. And out comes ASOS, and everybody loves on that, which is essentially the same business, but one's online and one isn't, although Gus could have been online very easily. But anyway, so everyone went, oh, yeah, this is brilliant, this is brilliant. Their share price exploded, and now it's pretty much, well, it's imploded, right? It's dropped by 2/3. I don't get that. And I would be a buyer around here if there wasn't even more deep value elsewhere. And so, I mean, that's a trend. It's a pretty strong trend. So once it would break out of its trend and stop that downward knife, I would be looking to buy that.
Okay.
But if you go on the bottom axis, Steffi, and you just concertina it together, where it says 2015, go on to where it says 2015.
Yeah.
Down a bit, down a bit, down a bit, down, 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 down.
Down.
No, not that down, just down a bit. Go,
Okay.
there you are. See when you got that little thing, up a bit, up a bit. There you go. Now click and drag to the right. You see? Stop. Yeah.
Oh, wow.
Yeah.
That's
now, if you drag it to the left a little bit, there you are. That's the whole chart.
What's happening here?
Well, you've got to understand that ASOS was one of the original .coms. And obviously everybody hated it. And then penny drops that this online stuff is good news. Well, it takes sort of 8 years after the .com boom for the City of London to realise the internet's a good thing. And then it goes through the roof. And then, because it's new, it goes through the floor, and then it goes through the roof, and it's gone. When it goes through the floor, it's gone through the roof. It might as well be Bitcoin, right? In fact, the chart looks like Bitcoin.
It's kind of funny because it all comes down to like this 2000 is kind of like.
Yeah, not necessarily. It could come down more, but boom, bubble, bust. That's what you're seeing, a boom, bubble, bubble, bust cycle. And we're in the bust cycle now. So, if you like to buy at the bottom and sell at the top, kind of around now is kind of where you'd be thinking about entering. But you still, as you can see, don't go to the yet. Don't go to don't do it. No, you can see that you really, when you get the bottom, it's a fairly large amount of time to get in, and it breaks that precipitous drop before it then moves on the up, and it moves for years, right? So now you'd be looking at thinking about spotting when you've got past that downward trend. And that might be now, it might be in 3 months' time. I don't think there's much of a hurry, but it has to get out of that dagger, that falling knife, before you get in.
Okay, let me just check Boohoo. That I was quite interested to see that chart and see if it's again another boom bubble bust.
Yeah, go down a bit, down a bit more. Go down. There you are. Now stretch. Yeah, it's not as old a company, of course.
Right. That's it. Well, it's not the same, but
No, you've not got it on this year. So pull it a little bit to the left. Left, not right. Left. Yeah, pull the whole chart. No, not that. Go up to the yellow. Go up to the yellow.
Yeah.
Go up to the middle of the chart. Right. And now click and pull it to the left. There you go. Yeah, so you can see the pound is kind of where it took a pause, but that's round number thinking. So now you want it to move sideways trade or break out of that vertical drop before you think about entry. Because while it's in that vertical drop, you don't really want to. But you can also see that boohoo has got a very sharp ability to bounce. It doesn't hang around for very long. So, take that as you want. I mean, that makes it difficult to time it. But, I don't see why these are now being valued like that. I would say that they are near their bottom. That doesn't mean they can't go to 50p, but you have to. I would say ASOS is an easier one to guess when you're near the bottom. But they're both looking like they're near the bottom, so they're both probably near the bottom. So if you wanted to build a position, you might buy a quarter of what you wanted to buy now and a quarter of what you want to buy in a month's time, so on and so forth, until you got your position, and just average in.
And I think they have got the opportunity, like all the brands now, they are entering the metaverse and stuff like that, to be more innovative about e-commerce. So I'm not saying that they have to start to do NFT, but what I'm trying to say is that there is the opportunity to reinvent their e-commerce.
If you're going to do crypto stuff, you've really got to know what you're doing.
Yeah,
you've really got to have bright people. And I think it would be very difficult for these sort of companies to attract that sort of talent.
Yeah,
because you've got to pay them a lot of money.
Yeah,
and they can do it themselves, right?
It's more likely they want to do their own. So Boohoo want to do the stuff their own rather than get an expert to build it, and then they are going to end up nowhere.
Well, these people are warehouse organizers and online shopping organizers. They're mentally far away from crypto. So for them to be able to pivot into that, that's what you'll see in all media, and we're talking about media now, really, is that people can't make the jump from the media they're into another media. Very, very rare. If you look at all the book publishers, they didn't get into magazines. You look at all the record companies and all the film companies and all the TV companies, how many of them got into the internet? And if they did, how long did it take them? How many missed that boat and almost went bust?
Well, Blockbuster got eaten by Netflix, isn't it?
For example. So to get from the old business to the new business, and you see it time and time again in media, if you're in one media, you can't pivot into another, because basically the mindset of the business you're in is at variance. It's very different from the one that the new thing is in, and you just can't get your head around it. And those organizations can't make the jump. So, I'm not a fan of, oh, look, this company should be able to look, Gus and ASOS, right? Perfect example. Yeah. Gus was ASOS, but nobody would even think that it was. So, that's just the way that this stuff goes.
I was going to put on Louis Vuitton, but I mess up with
go to 5 years where it says YTT.
Yeah, because this is a stock, like, for example, like Burberry, they are performing quite well, and they are like luxury stocks, and we are kind of in a recession. So,
yeah, well, all those guys have got they're fabulous marketing companies, and they get into products where they've got a 90% margin, and then they spend 25% of that margin on advertising and convince everybody that, to prove that they're a high status human being, they got to wear this very cheap piece of equipment. And they do a great job of it. And they invent luxury, and they have huge budgets to spend.
That's like a chart, right?
Yeah.
Okay. Shall we change sector?
Where do you want to go? What do you want to move to?
I wanted to move to, maybe we can do supermarkets, Ocado and Tesco, perhaps.
Well, Ocado's very, very interesting, because Ocado are Marks and Spencer's, and Marks and Spencer's owns a huge amount of Ocado's business in shareholding, and is basically valued as if it doesn't hold it. And that's something I don't understand. And, I yes. that I did buy quite a lot of Marks and Spencers on that basis, and they've gone up.
Yeah, but you can understand that. You can understand that because the investors can only understand you as one sort of thing. They just say, you know, if you're a drummer, they can't think that you could actually also be a piano player, and vice versa. And it's a bit like what you said about Gus. You know, they might have done the same business as ASOS, but people couldn't understand them as being more than one thing. They understood Gus as being what it was.
Yeah, no, there's a lot of truth to that.
The market is, you know, it's a bit like being typecast. If you're in the entertainer, if you're an actor, that if you always play the James Bond villain, then if you turn up as being like a nice person, the film is a flop. And it's that. But you can take advantage of that in a big way. I mean, that's fantastic in terms of, you know, you've got the value of Marks and Spencers, which is basically like Gus was, but it's probably more of an ASOS than ASOS is in that way. You know, or with Ocado, it becomes a geared play on Ocado, which is probably better.
Well, Ocado is another one of those companies that goes up like a rocket and down like a rock. And I think that Marks and Spencers is a pretty good play if you want to be in that area and you're looking for a takeover. I think it's highly possible that Marks and Spencer will get taken over. I mean, it would make sense for Ocado to do so to get its shares back.
Yeah, that's interesting. Is that perhaps this look like a boom bubble bust chart?
Well, that's Marks and Spencer's for you, but it is over like half my lifetime. I mean, that goes back to 87 there. So you're looking at 33 years.
Yeah. And I mean, here is what? It's like 744, 750. That's massive.
Yeah. Well, you know, Marks and Spencer was highly regarded once upon a time in a galaxy far away. Now it's just a supermarket, which has got an ancient business model that everybody thinks is dead.
So do you think supermarkets are like a good play for in this environment?
Well, I mean, some of them pay really great dividends. I think Sainsbury's has got a big dividend if you want to go see their fundamentals.
Okay, so
SBRY.
oh, SP.
B for Bertie.
I'm not familiar with this stock, so sorry. Okay, here we are. So
there you go. You've got 3.64 dividend. It's at the top there, that information. If you scroll up to the top. Right. So you see that they've got a 3.64 dividend. Yeah. They've got a market cap of 6 million. If you scroll down, I like to look at their balance sheet. Keep going. Go, down. Stop. So this is their balance sheet. And you can see, actually, interestingly enough, that they're getting more and more intangibles, which I take that as a bad sign because, you know, supermarkets intangibles, what are they?
What's that?
Yeah, exactly. So, you know, that feels like pumping up the balance sheet artificially. So, you know, not very profitable. They're turning over that 30 billion and only making 200 million on it. So that's a, you know, I wouldn't say a red flag, but you're not going to be falling over with how profitable they are. They keep a balance of a billion in cash, which is nice. They've got that nice dividend. Their debtors, who owes them money, is going down. Their stocks are staying the same, and their creditors seem to be going up. So that's, yeah, you know, it's not a pretty picture. It's not ugly, but it's not pretty. So, you know, and I think Tesco's, of course, if you go right to the top, and you can click on a button that says compare, which is just above where you are. There, yeah. Now down a bit, up a bit. Next, no, stop moving it. No. Go back to where you were. More. Stop. Right, in blue, it says compare to your left and up a bit. There you go. Oh, you don't have the proper subscription, Steffi. We'd be able to compare supermarkets if you have that. So anyway, sorry about that. I didn't know you didn't have that. Well, if you type Tesco's in there, for example, rather than Sainsbury's, TSCO, T for Tommy, S for sugar. There you go. Oh, there you are. Yeah, so you can see that it's also got that intangible, and it's got a 3 dividend, so that's the same. It's got a 4 PE, which means it's very cheap in terms of its profits. If you scroll right down to the balance sheet now, yeah, there you are. So they're making 1 billion on 64 billion. Very, 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 very tight margins. Very, very tight margins. And again, it's got that same process of getting more and more intangibles in there, and it's keeping its liabilities the same. And its assets are about the same, gone up a little bit over the last 4 years. So it's a stable business on a low PE. And so if you took all their profit for the last 4 years, so you've got, what's that, 2, 3, 4, call it 5 billion in the last 4 years. So if you go to the top again, so that's roughly 1.2 billion a year they're making. Well, they've got a market cap of 22.
22 billion, exactly.
Yeah, so
when Facebook has 6. And
your 22 billion is getting you 1.5 billion in profits, which is 15. It's okay. I mean, it's reasonable. It's not bad. And they've been in fashion. So they've come out of being deeply unfashionable, and they've all made this really, really nice run. And so now they're no longer cheap. I would say not expensive, but not cheap.
Yeah, I mean, it depends really in which as a Tesco supermarket, it depends in which area they are. Some area they can be compared to like a little waitress. In some other, they are quite rough, and you maybe don't want to go in. But yeah, it's definitely a brand that is. I mean, it's perhaps.
It's part of the great British and financial and social scene, isn't it? It's an important brand. But you can see, if you look out since 2018, it was at 180. It's now at 280. Oh, you had it in front. Yeah, there we go. Yeah, so in the last few years, it's gone from cheap to not cheap. I wouldn't say it's expensive, but it's definitely not cheap anymore.
Okay. So maybe let's ask Zach what he wants to bring to the table. So do you have any like gems or any kind of stocks, small cap, new IPO that you want to share with us?
Well, apart from my own, Lift Global Ventures, probably a few mining ones, but I think it's interesting. Obviously, Clem can't say anything, but it's interesting.
We go back to the beginning.
I always enjoy it when Clem can't say anything, because it's it's just that beautiful golden silence. But no, just to say that Lift Global Ventures is in the financial media space, and obviously ADBFN is in the financial media space. So
I would say you are making a bid.
And so all I can say is that if Lyft was already on the market and had the suitable financial muscle, it would be very interested in ADBFN.
Okay.
I hope that's not. Well, obviously, as we don't have the money, I don't think it's leading anybody anywhere. But it just shows that last month you had Interactive Investor getting taken over, and this month you've got ADBFN, and so that was, I know my area. I've known my area for 20 years, and the reason I'm doing an IPO in this area is because I think the area is hot, and I think that even the most sort of cold-hearted person would have to admit that the area is currently hot and has become hotter since the pandemic started, and it's great.
And I think, Zach, one thing to say is that you kind of have to find companies that are able to play in this environment, and it's not just easy to get into a sector that is hot with a business that is might gonna last a year. There are not many companies they have been developing over time, and they actually know what they are doing. So that I think that's very important.
Interactive Investor was 20 years old. ADBFN is more than 20 years old. I've been in this space since it started more than 20 years ago, and I think that is great. I'm not trying to sort of float NFTs or quantum AI or become a metaverse god.
Exactly.
It's I think that's a big difference, and because you just see these sort of CEO types or these directors of entrepreneurs or whatever they're called, just going, getting on the bandwagon of whatever is hot, and by the time they've listed the company, the party's over. So that's you saw that very much in Q1 last year, where you had so many NFT, this, that, and everything else, and where are they now, type of thing.
I just don't understand why people are trying. I mean, NFT is a completely unregulated place, and it perhaps is going to get regulated at some point. So you try to bring to the London market, which is, or any kind of a stock exchange, heavily regulated, a new assets which is going to get regulated when you don't have a strategy.
But that's the problem with over-regulation. When you have over-regulation, then what happens is you get a wild west of non-regulated things like crypto, like NFTs, like whatever is going on at the moment. And if regulation was actually much easier and simpler and cheaper, then these things, rather than becoming a wild west and people lose, if you could just be on a register of NFT producers or issuers, or the same with coins and everything else, that would be great. But the reason that you've got all these unregulated things is because the regulated world is so difficult and so expensive and so idiotic that people go underground. And that's the thing. It's better to have, it's like with cigarettes. If they were made illegal, which probably they will be made illegal, you'll have a horrible black market like you have with the drugs market. And that's the problem with the regulation. But as it makes money for lawyers, that's fine. So they don't mind ordinary people losing money as long as they make money, and that's what's happening. So that's a big problem with all these, with the over-regulation that we have at the moment. But the area, financial media is hot at the moment, and I think that it's going to continue like that. I think the company that I wanted to highlight this week is one that I've been following since it came to market at the end of last year, which is Mo Global. We had the interview with TAP Global, I think a few weeks ago, which is a sort of a crypto trading platform. Mo Global is also a trading and trading platform which has the regulation as well. It's been on the stock market but not had a great ride. But I think at 18p, which it is at the moment, I think it's looking very cheap now. It was floated at 50, so it's at 18 now, and so I think that something hopefully will it will re-rate as people appreciate that it does that. It's a listed vehicle. It has all the regulatory badges. That has to have a value which is more than 18 or 20 million pounds.
Okay, I think Mode was one of the company that I was looking at, but I couldn't make my head around. Clem, I think that's the one that that came to the market not a long time ago, wasn't it?
Yeah, it was like October.
That's like, and they are in crypto or something as well.
October 2020, and I think that it just looks as though it's at a level now where it's basically valued at just the infrastructure company and the regulatory badges that it has, and that's it. There's no sizzle, there's no hype in there at all. In fact, it's the opposite. And so I think probably the fair, let's say even at the lowest, it should be 40, 50p, which is where it's floated. And it's sort of 18 of them. So that's just, if you like the area, if you like this area, which I do, then I think that is a potential, sort of full listing is a potential situation. But obviously not for everyone. It's just something that I just think it's gone very cheap. It might be one to look at.
Okay, well, let's see what they are gonna do. Okay, thank you, Zach. Clem, we need to unlock them out at some point.
Thought he'd gone.
Well,
not getting rid of me that easy, Zach.
Well, I think that is going to be interesting to see what is going to come out.
Well, I'd just like to add one thing about crypto. I still think that crypto is going to be in a pretty strong bear in the short term, but it's going to have some interesting spikes. So any trader out there that likes to catch falling knives, there's going to be, I think, some of that going on. And, it's always an opportunity for traders when things go down really fast vertically and stop. There's always a little bounce at the end. And I know that a lot of our viewers really just love trading. So if you're the trader that wants to do day trading and wants to catch some excitement and make some money, keep a lookout for those verticals. Either way, frankly, because when the whatever drives them stops, it then bounces significantly. So if you've got a good trading platform that can actually execute when the market's really, really fast, that's what you should be looking out for.
Clem, thank you for that. And maybe we do a bit more crypto next time. I just
and a bit less politics.
Exactly. Well, Zach, I think is kind of infervorated. He loves
Well, I mean, I think it's good.
Yeah.
It's good for the audience. Audience loves it, I'm sure.
It's my fault, but it's just I'm guilty as charged for my middle-aged rants. But unless you point out these problems, they're not going to change, are they? I mean, it's going to stay the same. Well, I think we're like boiled frogs.
They're not going to change. They're just not going to change. Doesn't matter how much anybody points out them. It's some total way humans interact in this modern world.
No, but we're like over the years we're like boiled frogs. With more and more regulation, we don't really realize how much we're actually heating up, and literally the whole thing is literally on fire now in terms of how, and with COVID, the COVID tyranny as well, where you got to wear, you've got to wear a mask.
We've never lived in a better place, in a better world, in a better time. The history of humanity has never had it so good.
Yeah.
Really?
Okay.
Yeah. You find me another time in history where it's better to be than right here, right now.
I agree on that. I think in all my life I never been so excited.
The late 60s, much better than that.
Okay.
Well, that's because you were 6 years old and the world was new and exciting.
Yeah.
I was on the moon then. The moon landing was the peak, as far as I'm concerned. It's been downhill for 50 years.
No, come on, Zach.
That's classic psychological projection, Zach.
If we indeed, I'm not sure whether we actually went there, but that was symbolic of that was a peak.
Well, on that note,
okay.
One giant step for Zach, one giant step for humanity. See you all soon.